this is problem 13.9b, and I'm going to assume at this point that you can do the operating section okay, and I'm going to focus on the investing section, which in this case is involving investments in stocks and bonds, so it would be investments, and some planned assets. So here we look at the notes, and it says investments were sold at cost. Okay, so the difference between the two accounts, which would be the amount of the investment that were sold since they were sold at cost, is 27.5, and that means there were no gains or losses on those transactions. So we can simply say, okay, that explains that the investments were sold. We go to the investing section, and we say we sold investments. And it makes sense that we would have gotten some cash. Okay, now we come to the equipment, the plant and equipment, and it says depreciation expense for the year was $30,500. Well, we know depreciation expense goes in the operating section because it is an income statement account, and that's $30,500. That gets added back because no cash went out on that, and yet it was deducted from our net income to get at our net income amount. And then accumulated depreciation, that's the other side of that entry, would be credited for the $30,500. Now it says additional equipment was purchased for $146. Okay, plant assets, $146, we bought some. And then we go down and say we purchased plant assets. What are they calling it? We'll just call it plant assets. I use kind of plant assets and equipment interchangeably sometimes. Okay, so that's 146. And then we come to the equipment we sold. It says cash received for equipment sold. So remember, we're recreating the journal entry. So the cash proceeds here are $15,000. It says the original cost was $36, so we know that comes off the books at $36,000. The gain, okay, and we know the gain is going to be a credit entry. Gain on the transaction is $5,000. And so the missing bit of information is the accumulated depreciation, and that number we, add and subtract and plug, and it comes out to $26,000. Okay, so then we're going to post this entry more or less as is. This goes in the investing section. The accumulated depreciation is the top section. Gain, that's an income statement account, operating, and equipment in the top section. So we simply say we sold planned assets, and that's the $15,000 cash proceeds we got. We debit also our accumulated depreciation that went with that. The gain in the operating section, we'd say we had gain on the sale of equipment or planned assets. And that is a credit entry of $5,000. And then the equipment comes off the books at $36,000. So now when we check ourselves, we make sure 107 minus this gives you the ending. The 205 we started with plus 146 minus the 36 should give you the ending balance of 315. We started with 40,000 accumulated depreciation plus 30,500 minus the 26. That does not look right. Let me just double check. Oh. That's because, I picked up a wrong number here. That's why. And I'm not going to redo this whole thing. But that's why you check it anyway. Okay. It should come out to 44.5. That's the balance of the accumulated depreciation. Okay, we'll do that one again. 40,000 we started, plus the 30, minus the 26 should give us the ending balance of 44.5. Okay. And so that takes you through that part of the of this problem, and I would assume at this point that you could probably, there's nothing else too tricky in here. It's usually the planned assets that give people the most trouble with these. So in terms of doing an exam, do all the stuff you do know, because if you just goof up the planned assets, you know, maybe the sale of planned assets, it's not going to, you know, it's not going to hurt you that bad on the exam, if you can get the idea of everything else that's going on.